Hi everyone, making a video early this weekend as I'm going to have a very busy weekend ahead of me. Friday was a bit shocking, I guess you could say, as the market decided to take a day that was overall decently constructive and just blow it to bits by completely massively selling off in the final hour. However, overall, we were only down 1% of the day, but it was a very, very insane sell off, extremely dramatic, and because of that, my model has no choice. Even though that we are still climbing above the 20-day moving average, well, actually, technically, we're right on it, and still above the 50 and 200-day moving average. All of our models are switching to neutral on this market because, as I've said, churning days have shown up in the most recent move higher. A clear distribution day was hit, and then we've had some pretty ugly. We had a gap up, then reversal, then we gapped down and we tried to rally, but we couldn't hold it. And then we tried to gap higher and rally, but intraday we pulled back again on the 30th on Thursday, and then today we just had a straight distribution day. Very ugly close, which is going to force us to switch to neutral, which means it's time to add hedges, which I'll go over that here in a bit. But the one noticeable thing, look at the relative strength line in the NASDAQ. This is one good development. If this is just going to turn into a pullback, let's say the 50-200-day moving average, if the NASDAQ's relative strength line can continue to act like this, I think that that's going to make for a very solid outcome for us to possibly find support and rally higher. The same thing can be said here as the Russell 2000. If you look at the short-term relative strength line, that is very bullish to see, and you can compare that with the Dow Jones Industrial Average, which looks a little bit weaker. It's a little bit closer to 50-day moving average. Pretty big sell-off overall. Whenever you then look at the New York Stock Exchange, you can see it's right on the 50-day moving average, and this is like a big dividend-producing index. Look at the relative strength line since the January highs. That is extreme negative divergence, and that could possibly be bullish if we do resolve ourselves to the upside, because like I said, it is always very good to see the NASDAQ's relative strength line look like that, and the Russell 2000 overall leading, I guess is what we could say here during the pullback. So far, it's starting to get bad, but it's not horrible yet. And with that, I'm going to go ahead and I expect volatility to jump. I mean, the VIX already was up above the 200-day moving average today, up by 12%. The TVIX and UVXY and VIXIs, they don't move like they used to, but they appear extremely coiled, and I have a feeling when these start moving, they're going to move quite a bit. And if they don't, it will be a lesson learned, and we will move on from the VIX ETF machines. But it's right here. It's producing another pocket pivot point buy signal, and it's the third one in about 1, 2, 3, 4, 5, 6, 7. So not even 10 days, it's produced 3 pocket pivot point buy signals. That's the most on non-consecutive days that I've ever seen these ETFs produce in such a short amount of time. The last time was May to June in 2012, and it did roll over. And even if we roll over here, I don't care. I got still a lot of longs that didn't give signals to sell. So if we do roll over here, great. I'll cut my losses short on this one. However, since it was such a vicious day, we are to neutral. The hedge can be increased. Instead of being 5% across the board in my risk account, I'm going to put 10% into UVXY. If it doesn't work, we'll cut our loss. 5% in the non-risk account UVXY. Going to avoid the SQQQ because it's showing some extreme relative strength. So I don't see the index as weak as possibly the overall market if we continue to sell off. So I'm going to go ahead and focus on the volatility shares. Now, what do we have to get rid of today? Well, unfortunately, one of my best setups during the entire uptrend is just coming too deep and too late into the uptrend. LOCK was looking like FLT back in, let's go back here, December 2012 as it started to retake the 50-day moving average. You had that strong volume, and strong volume normally means you're going to get some good outsized gains. However, sadly, since this is happening so late into an uptrend, we can it just hasn't exploded out the gate just yet. However, if the market continues to consolidate, and if LOCK continues to consolidate, it will once again be another large long position. But let's say BOP goes to yellow or even to negative and then breaks out to new highs. it's not going to be a huge position because historically speaking, stocks that produce these huge volume accumulation days with massive pocket pivot point signals that also have max green bop that come from a previous uptrend on strong volume normally turn out to be huge winners. So the fact that it's gotten weak already is very, very troubling and sad to see, if you will. But it's a 20% sell, not 25, because it's not closing below the 20-day moving average, but it's closing below the 10-day moving average on strong volume, and the internals indicate some weakness for sure, especially TSV. That's exponentially rolling over, so not good. If BOP was sticking around at max green, let's say that it was max green this entire time we're pulling back, this close below the 10-day moving average will only be like a 10% sell. But because of the market and just the overall look of the pattern, it had to be 20%. WDAY, this is its first hard close below the 20-day moving average. It's closed below it a couple days in a row now, but the bullish intraday action prevented it from being a sell. However, it's failed to do that today, so WDAY, 25% sell there. ADS is closing below the 20-day moving average on extremely strong volume. Second day in a row of a sell-off, still well above the 50-day moving average and from our initial long position way back in December. So it's only a 25% sell. SIR is closing below the 50-day moving average on slightly above average volume. Not harsh enough to warrant a full sell or 50% sell, but a 25% sell. A subsequent close below the lows of the day or the 50-day moving average on heavy volume with the weakness overall in REIT shares, it will be a full sell. Full sells, FIG. FIG is a big failure, and what a fig this stock is, closing below the low a day of the signal day and also the open of the low here, 684. So that's a double, heavier volume sell-off, close the low a day, all around full sell. And then GMED finally gives a full sell signal. It's already given two partial sell signals, so it's a very small position left. But that heavy volume close below the 50-day moving average eliminates that one. And then the most disappointing one besides lock today is CHT. Once again, this is not something I would have expected to happen following, let's say, that move right here. We added to the stock. Let's see, took a position here. I believe I added to it here. I believe I added to it there. And then let me go check really quick. I actually have my diary in front of me, my trading diary. 4-9. I did not add to it there. Didn't think so. And then I did not add to it on the 11th, but I'm pretty sure I added to it on the 12th, and I sure did. So a lot of adds. And when you have a chart pattern like this, you used to be able to be sure that short term you were going to get some nice gains, even though this wasn't a very volatile stock that was going to produce huge gains. And even though the relative strength line was weak, I did expect with accumulation going on in March and April like that with all that max green bop and all the pocket pivot point buy signals, we would have a nice gain before we would ever have had what happened today, and that is a full sell signal with the heavy volume close below the 20-day moving average. So it's kind of shocking that such a nice chart pattern was only able to leave me with a 0.90% gain from my first signal and with a 0.26% gain since the final signal. Extremely disappointing and a bit surprising. I would not have thought that LOCK and CHT would have definitely ended like that. But at the same time, I passed on LGND 2 days ago and passed on PCYC today, and they both work. So that tells me that it's time to really be selective out there, as once again, what was happening from 2011 throughout 2012 is starting to now happen on the very short term again. And all the times that we've been right from November till about a week ago seems to be going by the wayside. Even in February and the April pullback, we didn't quite see new longs fail or act odd. And then we didn't have hot chart patterns, much less them fail so quickly like LOCK is starting to do and like CHT has done. So it's definitely time to get defensive, and you can play anything you want. If XY is too much for you, do VXX. If you don't like that, DRV is extremely bullish. If you don't like that, go short DJP or DBC. Those ETFs look like they're rolling over. So, or go long China, or inverse China, ultra short China. There's a lot of possibilities out there. I'm just posting what I'm going to do. All right, so, not all was bad. Still some nice stocks out there. Tango, looks good. DYN, nice little move. AMRE, CSII, nothing like there was anything amazing out there. But if Tango can continue to work on a base, and keep that max green bop, this one will be another possible new long whenever the uptrend starts again, if it does. But if we are at the Hindenburg Omen, like I saw that we produced a second one, we did one in April, now we have the Hindenburg Omen again here in May, has to deal with the amount of new highs to new lows, being above the 10-day moving average, blah, 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 blah. You can go to Business Insider and read an article on it. So there's a lot of opinions. A lot of people have gotten bearish extremely fast, especially after Friday's sell-off. So we are in the neutral camp, and we will do a wait and see. We will take our signals as they come. Only 3 full sells tonight and only 1 new long, and that's a hedge, and that's 10% and 5%.